Good afternoon, traders and investors. It's Will back here with another one. Well, bit of a flat day on SPY today, and we had another red day on technology. No surprise with the heavy momentum to the downside that we had yesterday. So today I'm going to keep it a little bit shorter because I got to run to a dinner soon here, but we're going to cover a lot of names and set you guys up for next week. Big earnings week next week for big tech. So we could potentially get further downside on tech if the earnings are not as expected, right? And as we can see, we're also getting some very good rotation from other sectors in the market, which is leaving the market as a whole healthy. You want to see rotation. If all the major sectors are red at the same time, day in, day out, like last year, that is when the money is leaving the market. That is when there's fear in the market. Currently, there's no fear. There's just pretty much rotation going on and missed earnings expectations, right? That's the only thing that's been bringing down the market in the past few days. So without further ado, guys, let's get into it right away. Starting off with the heat map. You can see, guys, very mixed market today. Once again, though, outperformance on healthcare. I've been calling this for a couple of weeks now that if technology does take a breather, two sectors are very well set up to make up for it. Financials and healthcare, the other two largest weights in SPY other than technology. And so far, they've been doing a very good job of keeping SPY afloat. So if we look on the one-day relative here, you can see very mixed market. Utilities, right? Very big day on utilities. Unfortunately, they only represent a very small component of the SPY, right? So not contributing to many gains here. And on the other hand, healthcare, very good day. Now, technology and financials, not that great of a day today, but financials has been doing a lot of heavy lifting over the past few days. So it's normal that they take a little breather. Overall, mixed market for the week. Of course, our main sectors that were down: technology, consumer cyclical, communication services. That's all this. Technology with semiconductors, right? Big tech. Communication services led by Google and Meta, which were also down. Also some Netflix in here. And consumer cyclical led by Amazon and Tesla. Obviously, over 10% drop on Tesla. Should be no surprise if you've been following along. Now, SPY, what are we looking for, guys? Still looking for the daily higher low. Flat on the day, right? Pushed up initially and then kind of faded off the rest of the day. But still, anything above 438 is just going to be hunting for your daily higher low. So bulls playing a decent amount of defense today. Wouldn't have surprised me if we got a minus 1% day on SPY and QQQ, but the bulls played great defense and we had some good rotation from healthcare. So still looking for higher low. Keep an eye on your EMA 12. No real red flags on SPY yet. As a quick reminder, we are dealing with this resistance level up here, 455 to 460. QQQ, same concept, right? QQQ, however, dealing with the resistance of the all-time high area. If I were to draw a line here where this area of resistance starts, we are pretty much right at it, right? So you can do this on your own charts, guys. This is the all-time high resistance area. Normal that we're getting a bit of pushback when we're pulling into this, right? So what are we looking for, QQQ? Anything above 363.50 is just a higher low. The bulls played decent defense today, still not losing the EMA 12 by much. However, it's getting to the point of no return soon. The point of no return is if we crack through the 618 and pull a bit deeper, then you set up the tables for a tightening range at best, or at worst, a daily downtrend. So keep an eye, guys. If we crack through 372.75, which is the 618 on the fib, it's because the likely scenarios become at best a tightening range and further upside, or at worst, a daily downtrend. If we do get a daily downtrend, guys, we have to zoom out to the weekly chart, and then you're going to be looking at levels for weekly consolidation. Pretty much anything above 357 right here is going to be a weekly higher low. So good amount of space for the bulls to still make that happen. We're talking about still about 4, almost 5%, right, before we really are in jeopardy of losing the potential weekly uptrend. So we're going to take this one day at a time. Next week's earnings are going to be crucial. So just keep that in mind, guys. Still looking somewhat decent, but getting close, guys, to where the bears, are really chipping away at these gains. The more they chip away, the better they set themselves up for a daily downtrend for further weekly consolidation. XLF financials, Bit of a red day today. What are we looking for? Resistance up here, 36 to 37. This area hasn't moved. I left it there the whole time. Getting close, guys, to where we started off with the banking crisis, okay? So at this point on XLF, anything above 34.20 is the daily higher low. Bulls are in very good shape on this chart. Tons of space, right? We can pull back an additional, 3% on financials in searching for that higher low. So tons of space. Bulls are set up well. At this point, since we're not really pulling back that deep, not going to go out to the weekly chart right away. But if you want to take a quick look at it here, weekly chart is in a clear uptrend, right? So whenever this move tops out, probably up here, that's when I believe that we're going to get the major pullbacks, right? So XLV at this point, healthcare, doing a great job. What happened? We broke out of our tightening range. And the guys who watch the channel every day, you guys must be sick of this comparison, but I'll bring it up again for people who haven't seen the channel. Costco, all right? Costco, XLV, all right? When these break with a bullish bias, they tend to run, especially healthcare has been suppressed here for a while. Some names pulling massive gains. We have AbbVie right here, right? Decent push on the week, guys. Hasn't even had earnings. This is a pre-earnings run up 7% off the bottom. You guys remember I was writing puts down here last week. So very happy with that position. Obviously already closed, so I didn't benefit from this run. But just to show you a few names, guys, that are running hard in healthcare. Don't leave healthcare behind. Look at UNH. This is another major healthcare player. So keep an eye on healthcare. A lot of room to the upside to run, in my opinion, right? So now, daily move up push here. Eventually, when this move tops out, we're going to look for anything above pretty much 131 to be your daily higher low. Very good level of support down here. So if they do pull back, you have your horizontal support. You'll also have your moving averages. That is what I like to call confluence. When you have confluence, you have more certainty that they are going to respect it. Healthcare at this point, guys, they're only less than 5% off the all-time highs. Very good job by the Bulls, playing some very good defense and now capitalizing and taking the move. So definitely bullish lean on healthcare. IWM Russell, these small caps pulling back. Why? Because we are in our area of resistance here, right? 200 all the way down to 195 is your area of resistance. It's been resistance for a very long time in the past. If you want me to extend this, guys, you can see that if I pull this all the way back, without moving it, right, all the way back, you can see that this is a very heavy area that we're moving into now. Support, resistance, right? Normal that we're getting some pushback here, especially with tech kind of falling off a cliff recently. Does not surprise me that the Russell is pulling back. Anything above at this point, 190.33, is just a daily higher low. So until we lose these daily higher lows and set up daily downtrends till we lose this 12 EMA as well, you really can't look too far into this, guys. 1 day at a time, right? Let the charts play out. Let the moves come to you at this point, okay? So on the weekly as well, very nice weekly uptrend, right? This is leg number 2. This is leg number 1. This is leg number 2 of the entire weekly move. If we were to pull back, if we were to lose the daily higher lows potentially next week, let's say, well, the Bulls have tons and tons of space above 181-ish to set a weekly higher low, accumulate some positions, and then smash through our resistance area up here. That would not surprise me if it happens. Dow Jones. Dow Jones looking very, very, very healthy. Love the weekly close on this one, closed above our 34,500 area. This was really the neckline of our inverse head and shoulders. Pattern played out beautifully. I've been calling it for a very long time. Still some decent names. I'll be making a video this weekend of my top 10 value names that I'll be looking out for. A bit of context. Value names that I'm going to be going for are names that are still generating very aggressive growth in terms of revenue, have very decent margins, and that have charts that look like this long term, right? So that is what I want to key in on. I'm not going to take charts like some, there's some names, right, considered to be value that just have never come back. Like let's say Citigroup as a financial player, but for example, right? They've just never come back from 2008. It's a well-known stock. I use it as an example every time, but I want my charts to look like Estee Lauder, which is currently down a lot off the all-time highs. I want them to look like Estee Lauder. I want them to look like Nike, which is considerably off our all-time highs here as well. I want them to look like Dollar General, considerably off our all-time high as well, right? I want these to be growing businesses with good margins, good management, but are somehow still significantly off the all-time high. So there's going to be a few of the names we're going to bring up in that video. As of now, Dow Jones just plowing through. What we can do here, guys, is we're looking for the daily higher low. This is actually, this is actually one entire move. So at this point, anything above 33.7 is just a daily higher low. Look for confluence between our horizontal support, which is this neckline here, and the moving averages. If we do pull back, would not surprise me if we kind of bottom out here and retest and break out further towards our all-time high resistance areas. Bitcoin, absolutely nothing. Weekly consolidation still underway, right? Rejecting decently from our support zone here. So bears not able to follow through on these moves. They've had how many stabs at it? 5 days in a row that they've tried to push through this area, haven't been able to do it, right? So no follow through on the case of the bears. We're still in a weekly bull flag. Even if we break the support area, we're still in a weekly bull flag. So this is leg number 1. Bull flag, looking for leg number 2, definitely need to crack our 31.7 area. But for now, no movement, still stuck in the range, need the bulls to pull something like this, set a brand new daily uptrend, and really give the momentum to the upside. The rest of crypto I'm not going to talk about because Bitcoin is leading it all. Apple doing a very good job, guys, of holding EMA 12 on the day today. Apple with a negative day once again here. So currently pulling into our EMA 12, anything above 186.72 is just a daily higher low. Until we lose the daily higher lows, okay, the bulls are still in control of this chart. This is what I want to show you on a lot of these tech names, right? Watch the higher lows. Until we lose them, anything above them is just for a daily higher low for more continuation of the upside. Until the bears set a daily downtrend and smash these lows right here, you cannot really look to the weekly, right? Or even higher to say, oh, okay, we're in for a few weeks or maybe a month worth of consolidation, right? One thing at a time, okay? Anything above 186.70 is your daily higher low. Bulls doing a good job of playing defense on Apple. Keep in mind, guys, Apple with earnings in 2 weeks. A lot of major tech, though, next week. AMD playing good defense down here, but whew, cutting it close, guys, right? So this is pretty much our support line, 109.23. Double bottom at it, right? Today, a bit of a muted day here today. The bulls are struggling to hold this daily uptrend. This is a perfect example of potentially being able to lose a daily uptrend, okay? The bears engulf. When they take back all of the move, they have a good chance of setting up a lower high, right? Lower high and then lower low. If you see the lower low, if you see the daily downtrend confirm, then you always look to the higher time frame. That becomes weekly consolidation and you're expecting it to move lower, okay? It takes a while to turn around a daily downtrend, sometimes 1, sometimes 2 weeks. So if you do see the daily downtrend appear, expect further consolidation of the downside. Sweet spot for me on AMD, 105 all the way down to 100 area. That is an area where I consider the stock to still be relatively cheap. Obviously down here is way better, but if we're talking in the immediate term, close area of support here, this is the area that I'm targeting. I will be going fairly heavy on AMD if we do pull down into this area. Not going to throw the house at it, of course, but in terms of maximum amount of contracts that I'm willing to deploy, which on AMD is usually 3 to 5 contracts, I will be going fairly heavy in this area. If we do pull down into here, that means that I can write below $100 in this little pocket here and farm good premium. So just keep an eye out on that, guys. Crucial level right now, right? Crucial level. It's going to take a lot. If the bulls want to regain this at this point, they're either going to have to create a tightening range, okay, or reset the daily uptrend right away. But as of now, not looking too good on AMD when the bears take back this entire move, right? Amazon earnings next Thursday. Watch Amazon, okay? Amazon at this point failed the 52-week high and reverses. This is an example of a confirmed daily downtrend. Okay, so Amazon now at this point is in a confirmed daily downtrend. So that being the case, we look up to the weekly. At this point, where is the weekly higher lows, right? The weekly higher lows is pretty much this area down here, okay? If we lose this, guys, then we are definitely moving further. Then after that, you have to look even one time frame higher on the monthly for some potential monthly consolidation. This could be pretty much, in my opinion, maybe the end of July, right? Next week with earnings and potentially into early August, rate hike and potential inflation concerns for the month of July since people are spending more, okay? So just keep an eye out on Amazon at the, in this case, right? Since we were setting, this is really a line in the sand level for me. Pretty much, if you're looking at a weekly uptrend, okay, this is pretty much your weekly uptrend. We never set a higher low this entire time. Why? Look at the highs. New highs every single week on Amazon. We never lost pretty much this series of higher highs on the week, right? Always going up higher in price every week, and if we don't close there. So even though this is a key level for me, truly, the line in the sand level is all the way down here at 102. Anything above 102 is a weekly higher low, okay? They have so much space. So even if this daily downtrend were to continue further into potentially my sweet spot, 118, 115, the bulls have created so much space that anything above here is a weekly higher low. So even if we get weekly consolidation and we lose this key area of support, doesn't matter. We're still just looking for a weekly higher low compared to this guy down here. So don't get nervous is the moral of the story. Tons of space to work with. This is just my sweet spot at which I'm ready to deploy a fairly decent amount into Amazon. If we were to pull back from there, from the 52-week high, that would be a 13 to 16% discount. Fairly decent discount in the grand scheme of things. So keep an eye out on Amazon. We are in a daily downtrend. For the bulls to reverse this, they need to do something like this, okay? Keep an eye. If we lose this level, in my opinion, guys, we are going to push significantly lower, potentially testing my green zone. That's why I have this line in the sand level right there, okay? Google also struggling, okay? Look at this. Google was in a daily downtrend, all right? So highs, lows, lower lows. Now, what happened this week is the bulls were able to reverse this in a significant fashion. Actually, last week, we engulfed the move, and then we were looking for a higher low compared to this low down here, 116-ish, right? This guy right here. Now, what's the problem? The bears have now dug significantly into this up move up here, right? So when the bears do such a good job of pushing down into it, your most likely scenario becomes a tightening range, or worst case, a daily downtrend again. So still, anything above here, we're looking for the daily higher low, but the bears have now come down so much that if the bulls start pushing up, they may get exhausted, and we may just get a tightening range within the support area right here. These two yellow lines, I'll remind you, resistance area turns into support, still valid, very big area, right? So it remains to be seen next week. Keep an eye. Tuesday earnings, in my opinion, unless the stock stays flat, we're either going to crack back up to the 52-week high area, or we're going to flush this area right here and start moving in a new daily downtrend here towards my sweet spot. My sweet spot, 110 all the way down to 104 for picking up more Amazon. I would really love to have Amazon down there. I apologize for anyone currently holding the stock, but this is my target area for, why do I always say Amazon and Google? On Google, okay? My key area on Google, which is one of my favorite stocks, 110 to 104. All right, guys, watch out for this sweet spot next week. Meta doing a very good job here of playing some slight defense today, even though we were down a big day. It could have been significantly worse, in my opinion, guys, because we are coming off a really outlandish weekly move, right? So it's been very aggressively moving to the upside. Now, usually when you see something like that, you get very heavy momentum. This could literally flush through the floor. And in my opinion, in 2 days, 7.7%, okay, that's pretty heavy on Meta. But look at the weekly guys, right? if they really wanted to, they could have really flushed this thing hard, but they didn't. We held the EMA 26 at this point. Doesn't come up often, but when it does, it's been Meta's last line of defense a few times in the past, right? So that's why I say they did a good job of defending it here today. Remains to be seen next week, as we do have earnings on Wednesday. Big week next week. Massive week, right? So in this point, right, we have now pretty much lost the daily uptrend. We lost the higher lows, 305, right? Now remains to be seen. Can the bulls save this and V-shape? Or are we going to end up potentially, when this thing bounces, it could also do this and then bounce. If we get a daily downtrend, guys, we have to zoom out. Zooming out on Meta, if we go all the way back here, your weekly higher low pretty much, guys, is going to be 258. That is my target area for Meta, for the bulls to remain control of the weekly chart, right? So just keep an eye on that. Earnings is going to be crucial next week. If we do get a slight downtrend here on Meta, I have to move this area, my new area now on Meta. Sorry about that, guys. My new area on Meta is going to be right here. Okay, so if we do move back into potentially the 260, 250 area, I will be looking in the 230s all the way down to 203 to see how much premium I can get down there depending on the volatility. Obviously, that's a big move, right? That would be another 20%. So I understand it's a very big move, but those are just my key areas, guys. They don't have to be yours. They're just mine for trading purposes, all right? So Meta, keep an eye out on that, guys. Need to hold these moving averages, and as the further the bears push down, they open the door for a lower high and lower low setup, which would be a daily downtrend, zoom out to the weekly, and then go based off the levels there, right? So good push by the bears here. The bulls really need to kind of step in hard to turn this around, potentially make a tightening range, or reset the daily uptrend altogether. So still a bit of red flags on Meta. Microsoft here, losing your daily higher lows as well, right? 342.70 was the daily higher low area. They have now lost it. So once again, the bears have set themselves up nicely to create a daily downtrend. Haven't had a daily downtrend on Microsoft since this area here. Bears were lacking follow through. Same thing could happen, right? We could get a daily downtrend and bears just lack follow through and we just take it right back. Earnings next Tuesday. Keep an eye on major tech next week. As a disclaimer, I'll be going very light next week on writing options. I do not like this week where we have most of big tech reporting, because at this point it can go either way. You saw what happened with Netflix and Tesla. In my opinion, their earnings were good, but they were not good enough for Wall Street, okay? Slight misses on each of those companies sent them down 8 to 9%. So that's the type of market we're in. These stocks have run a lot. So any slight miss will be an opportunity for a lot of large players to take profits and roll them into things that have been kept low over the past 4 or 5 months, a lot lower than tech at least, financials, healthcare, and value stocks. Just keep an eye out on that, guys. If these guys miss earnings by even the slightest amount, I'm telling you, they can go down heavily. Why? Only because they've run so much. It's nothing more than that. It's not that the company's bad or anything. It's just they've run so much that now people can aggressively take profits and not feel bad about it, all right? So at this point, Microsoft, keep an eye out, playing defense here. Really, you want to be able to hold this level into next week, and earnings is really going to be either, in my opinion, a flush of 327 or a new 52-week high. It'd be very surprising if these companies actually do nothing. That's always a possibility, but it's not the most likely scenario in my mind. If we do pull back, Microsoft don't like this weekly close. If we do pull back potentially with earnings next week, right, I'm looking for the 310 pretty much all the way down to 285. That is my sweet spot on Microsoft that I would not mind picking up more shares, writing some options to acquire shares in this little pocket here. Okay, so very key level and line in the sand level here to the downside. Your weekly higher lows here is 327 line in the sand for the weekly. Because if you do this, comes a weekly downtrend. Okay, so first things first, we're going to monitor. Do they get a daily downtrend? If they do get a daily downtrend, it means weekly consolidation is underway, and it means we're looking for the further downside levels. All right. Now, NVIDIA, same thing, although we haven't lost the 416. Haven't lost this 416. Your daily higher low is right here, okay? 416, 417-ish. So anything above that is just a daily higher low for potential continuation. Less red flags on NVIDIA than a lot of other major tech. But if major tech next week reports bad, NVIDIA will not be immune, right? So keep an eye out on 417. If we lose 417, sets it up for a daily downtrend. At best, I reiterate, a tightening range. At worst, a daily downtrend when you flush this area right here. Daily downtrend, you're going to look higher. At that point, if you look higher on NVIDIA, I'll give you the levels right away. The weekly higher low, 403. If we lose the daily downtrend here like this, okay, then we are looking at 403 for this little pocket area. That would be your weekly higher low in jeopardy of being lost. If you lose the weekly, obviously you start looking lower for monthly consolidation, but one thing at a time, daily trends first. All right. Now, Tesla also struggling today, very hard. I did get assigned Tesla at 270. I was actually forced to write some calls. I wrote the 240s in the money for next Friday. I do not trust next week, guys. I would rather limit the risk. When the stock was trading around 260, I wrote the 240s, okay? It basically allows me that if the stock were to drop all the way to 240, I don't lose money on my shares. So I kind of jumped the gun. Rather than writing covered calls above the price, I wrote them below the price, which ensures if we do drop, then I am fully protected. If we rise, obviously I don't make any money on the shares, but I am trying to limit my risk. That is the name of the game, guys. Yes, you want to maximize profits, but you don't want to be giving back too many gains if you don't have to. So I'm willing to take that as a hedge play to limit my risk with such a heavy week next week. If big tech didn't have earnings next week, I probably would not have covered up so aggressively like this. But with big tech next week, guys, if Microsoft, Facebook, and Google and Amazon, right, if they put in some poor earnings, then Tesla is coming down. They will come down just as a nature, as a byproduct of being in a tech-heavy index, right? So Tesla at this point, right, we have lost the daily higher low. Let me erase some of these levels for you guys here. This was my intraday support levels. So at this point, guys, the bears have really claimed the higher lows, right? So now we have lost the daily uptrend. At this point, what's going to happen? Two of things. Either we're going to make a tightening range, or the bears, whenever this move stops, are going to set a lower high and then flush for a daily downtrend. Okay. If we get the daily downtrend, I'll let you know the level right away. You look to the weekly level, 240. Cannot lose 240 if you want to keep the weekly uptrend intact, right? So very aggressive move to the downside by Tesla since earnings. A bit of an overblown move in my opinion. However, can't blame them. I mean, guys, this stock has run tremendously even since May, up almost 79%. So it's normal if they don't get a perfect earnings and perfect earnings call where Elon Musk isn't slightly bearish on a number of things, right? Then the stock will take a hit. Why? Because it has cushion. It has some to lose. So you have to keep that in mind, okay? So now at this point, we're looking out for a daily downtrend potential at this point. I would be very surprised. It can always happen in a perfect world if next week everybody reports green and everybody flies to the moon because all big tech earnings are bullish, which is a small case scenario, right? But it's possible that we get the V shape. Is it likely? No. So I'm just about probabilities. I'm just looking at things neutrally. When you lose a daily uptrend and the bears engulf like this, the best the bulls can usually do on a probability-wise basis is a tightening range and regain the daily uptrend after that. The worst that can happen is an immediate daily downtrend, right? Immediate daily downtrend and then into further weekly consolidation. This is only 1 week of consolidation at this point, guys, right? This has been how many weeks of up pretty much in a row, and now we have 1 big week of weekly consolidation. So if you lose the daily uptrend, haven't really lost the daily uptrend in a while, since all the way back here. So if you lose a daily uptrend, weekly consolidation becomes inevitable. Sweet spot on Tesla, 230 all the way down to 210 for me to be riding heavier. At this point, like I said, guys, I'm covered all the way down to our weekly support line, okay? So just keep that in mind, guys. Tesla, not looking very bullish. Going to take a lot of work to potentially turn this around, right? It's going to take a lot of work, tightening range, and then potentially move up. But if big tech earnings are bad next week, we are potentially setting up for a move like this. Even though our lower time frames are oversold, they can easily put in a little bounce like this and then flush and then set up the daily downtrend, right? So Tesla, just keep that in mind. And obviously, if we get a masterfully bullish case scenario, well, your resistance remains put between $300 and $315. So that's pretty much all of big tech, guys. Want to keep this a bit shorter, not going to run through the other ones. I'll cover the other ones in a video this weekend. But that's pretty much it. I hope this was helpful for you guys, okay, in terms of big tech and just understanding what's happening in the market, why things are dropping, and where they could potentially drop to. So key points, guys. Focus on your daily trends. If we've lost the daily trends, you zoom out to the weekly and you say, okay, where can these pull back in the event of a weekly consolidation? That's where I have my sweet spot areas. You'll notice that my sweet spot areas are even under that. So I'm fairly conservative on them. So number one, keep an eye for your daily trend changes. If these names lose the daily uptrends like they potentially have on a lot of them, right? Sets it up for at best a tightening range, right? Or at worst, a daily downtrend. If you get your daily downtrends next week, guys, then you have to be looking for weekly consolidation. The silver lining of all this, guys, is that XLF and XLV are going to be able probably to put in some good work to offset the weakness of technology, which means that SPY should remain fairly stable, which means SPY is not going to do this, okay? So that's the moral of the story. Now, QQQ in the next few weeks could definitely do this, right? Pull back another 4 or 5% potentially, right? But SPY, I don't think will be as aggressive because we have so much support from other sectors, XLF, XLV, and our value names here, that I think SPY will be able to hold on fairly well. And when we're through this on the other side, guys, there'll be some very good buying opportunities, especially in tech. If you've missed them throughout the year, I do believe that if we get bad earnings on a number of them and we get some weekly pullbacks into August with the rate increase and potential inflation concerns, that'll bring some of the tech stocks down, guys, to get you guys in for round number 2. Because as you know, this market, in my opinion, we are now in a bull market. So this market should be bullish for the next 5 to 8 to 10 years as a whole. I do not believe we're going into a hard recession at all, and things are only going to get better from here, guys, okay? So I hope that was helpful. Hope you enjoyed the video. I'm off to dinner with some of my friends here, so sorry, I had to keep it a bit, it's not even shorter. It's like 32 minutes right now. I apologize. I have too much to say all the time. So appreciate you guys for being here. If you like the video, consider giving it a like. I really appreciate it. And if you subscribe to the channel, I also appreciate you guys so much. I love you all. Hope you had a great week trading. We will be on point next week for trading. So just keep an eye on this, guys. Don't get too aggressive. Please, please, please don't get too aggressive. Unless you want to YOLO, then YOLO. But not financial advice. In these types of weeks, I tend to go a bit lighter. I like to watch what happens, let things come to me. Okay? So take care, guys. I'll see you on the weekend with my top 10 growth and value stock picks for the foreseeable future. I love you guys. Peace.